Want to start?
Morning, everybody. Welcome back to the Opportunistic Trader. It's just after 10:45 on November 14th, and we're joined by Commodity Research Group's Andy Lebow. How's it going this morning, Andy?
It is going pretty well, Michael. How are you doing?
Very good, very good. Energy is the hot topic of the week and of the past few days here. Energy, you got crude oil moving lower, natural gas moving higher. We typically bring you on to break down the DOE energy report, but with everything moving in energy, we wanted to talk with everybody energy. So tell us, what are you hearing? What have you been seeing? Is it anything fundamental, or what are you hearing on the energy front?
Well, I think is there anything fundamental? Yeah, I think a lot of it's been fundamental, despite many traders and some analysts trying to blame this decline on anything but what it's all about, which is as we've talked over the last I think 3 or 4 weeks in a row, about this massive increase in supply. And clearly, given what the market's response to it has been, unexpected. Now it looks as though OPEC, I think, given the price movement, certainly has gotten the message, and they're seriously talking about a supply cut. And the numbers they're talking about, last I saw this morning, it started out at 500,000, then I think it was 1 million, and now they're at 1.4 million barrel a day cut, which that's a good number, Michael. That's actually an excellent number.
So, is that news that came out today? I didn't see that.
Yeah. This morning, the balloon that they're floating is 1.4 million barrels a day, which, as I said, that's good.
So I've been hearing, we had Phil Flynn on last, and he was talking that, there was a lot of talk with yesterday's explosive move. We have option expiration today for the December contract, that there was a huge unwind of position that really exacerbated the recent move. Have you heard anything about that?
Yeah, totally agree with that too. I think exacerbate is right. You look at all the strikes that the market went through. It's really a gamma rush. As the market goes down, people who are short those puts and never in their wildest dreams, thinking they'd have to cover them. They all of a sudden there they are. They've got to cover. So you had I think it was a record. I think it might have been a record volume yesterday in crude options, or close. It was over 700,000. And so you're either buying your positions back, you're selling futures, any way to hedge it. And you look at the vol. The vol spiked 15 points yesterday, Michael, from like 31 to 47%, basis to January, which is, there's a remarkable move
Yeah,
right
we
there.
were looking at put positions for the next expiration at $45 that were trading like 50 cents.
Right. The panic is on. And I think the whole move down was fundamental, but yesterday, yeah, I think the extent of that move was, part and parcel of the options, what's happened in options. And yeah, that was
So
definitely
where do we go from
that that
here?
was that was definitely definitely a
Do you,
major
do you hear that
factor.
there's more unwind or based on this sort of price action, or do you
There may be more. The interesting thing is that one of the big strikes yesterday, one of the big volume strikes yesterday, was the D's 2020 $100 calls. Okay, so I don't know if that was I don't know if that was an unwind, or somebody taking a shot. I didn't see where it was trading, and we were talking up here today, at Commodity Research Group. I looked at my partners. I said, it's not completely out of the realm that these 2020 $100 calls could be in play. I wouldn't put a lot on it, but it's not completely out of the realm. What I think is going to happen here, as I was saying, I think if 1.4 is the number, and I don't know how they're going to deal with Iran, but I think that's going to hold the market in here pretty good, and I think the market is going to turn, and it would not surprise me to see it back into the low 60s by mid January, low to mid 60s by mid January, maybe before that, because if you look at if you're a barrel counter like me, and you look at where the barrels are, what the expected demand is for for OPEC. You would move from like 1.5 million, well, 1.8 million barrels a day surplus down to only 400. And the market, I think, could live with that. So, yeah, those cuts, I think, are going to
So
be
you
are going
think
to.
eventually, once all the kind of positioning unwind and sort of volatility settles in, you think that once again, like what you've been saying for a little while, we settle back in the $60 barrel range, like somewhere between 60 and 65, something in that.
Yeah, it wouldn't surprise me in the least. Again, I haven't seen the nobody's seen what the actual deal is going to be, but and how they're going to account for Iran. But the Saudis are probably they're talking about a 500,000 barrel a day cut. What happened with the Saudis, and the other thing that uh, the other thing that really hurt the market is the Saudis sold, and they not only were producing like 10.7 million barrels a day, but they were dumping a lot out of storage. So, who knows how much Saudi supply was really going on the market, or still is on the market, you get a nice cutback from the Saudis. They could probably get the UAE and Kuwait in. And the Russians, I don't think they're going to cut all that much, but they may give like a lip service cut.
When we get price action like this, do you see big changes from? You're talking about big players here, Russia, Saudis, things like that. How do they start to react? Based on moves like this.
Well, they freak out. I mean, I think at this last, from what I understand, at the last meeting, this weekend, obviously there's a lot of concern by they made they said we're gonna cut, and they're throwing numbers out. So yeah, I mean they're obviously concerned. The Russians are a different situation because they've got a group of producers that have invested. They didn't want to go along with the last deal. The last production cut deal. I don't think they're really that anxious to go along with this one. And Novak is not really their oil minister is not really jumping up and down saying, "Oh yeah, we have to cut, we have to cut." So Russia may be a different situation, but I think the Saudis, they'd really like prices into this. They'd like WTI in the closer to 65, 70 than 55.
Where do you think the
So
U.S. administration wants oil prices?
the U.S. administration probably wants oil prices as low as they
In the
possibly can.
40s, right?
Right in the 40s. Maybe, but there's there's a lot of producers in the red states. But I guess there's more drivers than there are than there are producers. I think that the U.S. Yeah, I can't say. Probably. Actually, they probably, if they were really to think about it, they probably want it right in the same place. They're right in the same place as the Saudis. Because that way everybody can live. The producers, can make a decent profit between 60 and 65. The consumer is paying 60 to 65. Let's say the consumer is paying an average price of 265 to 275. You can live with that, right? So if they were really to think about it, they'd want it in the same place as the Saudis.
Well, overnight we traded down to 55.13 in D's crude. We're right now at 57.05. RBOB is up 2.75% at 158.50.
Right.
RBOB as well. I think we were at 10. I think we were trading 210 a few about a month or two ago.
Right. And so, that's, I guess, the flip side uh, is always from the consumer side. We'll be paying lower prices for gasoline at the pump, for heating oil. Um, and there was a lot of focus. Personally, I think it was misplaced. Not misplaced. I mean, obviously for the emerging markets, this is a big, it's like this is a big cut for them. In terms of prices, there was a lot of concern about the strong, where the strong dollar and higher interest rates hurting emerging markets demand. Well, obviously this is going to help them. This is a big cushion for the emerging markets, which should be supportive for that sector. And with benign energy prices, it also it's could affect where the Fed looks at inflation, and where they go next year.
Yeah.
So there's a lot. This decline is probably welcomed. Um,
What
it,
about, we've spoken a few times in the past about Canadian oil being heavily discounted to U.S. oil. What's that been doing over the past few weeks with this drop in crude? Has it been moving proportionally or?
Yeah, because well, not quite proportionally. Canadian crude is, I think last I looked, it was trading, like $41 or $42 under WTI for heavy crude. So, what does that mean? If we're 57 and it's 40 or 42 under, they're getting $15 for their crude. So yeah, it's still a big problem, and that's an infrastructure problem that is not going to be resolved anytime soon, unfortunately for the Canadians. But that too could be bullish down the road, because Canadian production may not rise quite as much as may not rise quite as much as expectations. So yeah, that's good question, Michael. They're hurting badly up in Canada.
Yeah, no, it seems like it. So that's I was just reading a little bit more about that more recently, and it's a pretty amazing move and where they are versus the rest of the world.
Well, yeah, and they're trying to get there'll be more rail coming out of Canada, more truck coming out of Canada, but what they need is pipelines. And that once again, a judge shut down the Keystone XL, the mythical Keystone pipeline, which was really not what they needed. And they need, they need access to the West, the Pacific coast, but that pipeline got canceled. I mean, there's been a lot of cancellation of pipeline capacity out of Canada, owing to the environmentalists. And of course, as we've learned, rail is much less, is much less safe, and ironically, can cause a greater environmental disaster than pipeline spills.
Yeah.
You remember that rail, um, the tragedy in Montreal. It killed like near in Quebec. It killed like 50 people, or there were many fatalities when the
Right.
when the rail car exploded.
All right. Well, hey, Andy Lebow, thanks a lot for that update and analysis on the energy markets. It's been a volatile week, so a
Oh
lot to
man,
talk about there. But
yeah,
we
it's been
appreciate you taking the time, and we'll speak with you next week.
all right. Thanks, Michael.